You think you understand the market, but while you're panicking, the market is already painting a picture that only the whales truly see. Imagine a massive shadow sleeping for 7 years, motionless, unnoticed, almost forgotten, and then suddenly it wakes up. It moves 2043 Bitcoin worth over $140 million. And it does so at the exact moment Bitcoin gets rejected once again at the psychological resistance around $70,000. That kind of timing doesn't feel random. It's the kind of event you cannot ignore. Because when a whale like that wakes up, the entire market trembles. Bitcoin never moves in isolation. Historical cycles, on-chain data, liquidity zones, and macroeconomic tensions weave together into a complex pattern. To outsiders, it looks like chaos. To experienced market participants, it's choreography. The real question isn't just, why is this whale moving coins after 7 years? The deeper question is, what does he see that you might not? Let's look at the current market structure. Bitcoin was clearly rejected at the $70,000 resistance level. Price dropped back below that mark and is now ranging between $66,000 and $69,000. This is the zone where markets get nervous. This is where liquidations start stacking up like dominoes. Below $68,000, there's a cluster of leveraged long positions. If that level breaks, automatic liquidations could trigger a cascade, a domino effect that quickly pushes price towards $65,000 to $67,000. Now picture this. The market is already showing weakness. Traders are nervously adjusting their stop losses. Social media is screaming local top confirmed. And at that exact moment, a 7-year dormant whale moves 2043 Bitcoin. This is not a routine transfer. These coins were last moved in 2019, when Bitcoin was trading below $4,000. Back then, the market was in full capitulation mode. Sentiment was toxic. Almost nobody wanted Bitcoin. Anyone who bought and simply held during that period is now sitting on a 10x or even 20x return. And now, after more than 2,500 days of silence, that wallet becomes active. That triggers emotion, fear, FOMO, shock. Investors immediately start asking, is the whale sending funds to an exchange? Is he preparing to dump? Are we about to see a downward spiral? But this is where the real game begins. While you might only see the headline, $140 million moved, on-chain analysts look deeper. Where did the coins go? Directly to an exchange, or first to a new cold wallet? Historically, large dormant movements were not always precursors to a dump. In the 2017 and 2020 cycles, we saw similar reactivations of old coins, often ahead of major trend shifts. Sometimes it was internal restructuring, sometimes OTC deals, sometimes security migrations. The market loves to test your emotions. It pushes below $70,000, activates uncertainty, and then a whale movement appears like a looming shadow. But the truth is more complex. Glassnode data has shown for months that older coins are being reactivated more frequently. Not in panic phases, but during periods of elevated volatility. That suggests strategic repositioning, not necessarily capitulation. At the same time, short-term holders are under pressure. The short-term holder realized price is approaching the current trading range. Many who bought above $70,000 are now underwater. That creates sell pressure. But long-term holders? Their supply remains near historical highs. The amount of Bitcoin in strong hands is close to all-time highs. That means freely available supply on the open market is limited. And this is where scarcity comes into play, since the last halving, daily new issuance has been cut in half. Institutional demand, especially through ETFs, has structurally absorbed more Bitcoin over time than is newly mined. Even if there are short-term outflows, the long-term trend remains intact. Supply is tightening. Demand grows in cycles. It's like a beach ball being pushed underwater. The longer it's held down, the more violently it shoots upward once pressure is released. From a macro perspective, we're in a sensitive phase. Inflation remains volatile. Central banks are sending mixed signals. Global debt levels continue to rise. More corporations and even sovereign entities are evaluating Bitcoin as a strategic reserve asset. Samson Mow has talked for years about nation-state game theory. If one country aggressively accumulates Bitcoin, others may feel pressure to follow. That dynamic unfolds slowly, but it's powerful. While retail investors fear short-term price swings, institutional players think in cycles, in liquidity phases, in accumulation zones. If the $65,000 to $67,000 range gets tested again, history suggests that could represent reaccumulation rather than the beginning of a bear market. Think back to 2020. Before the explosive breakout, Bitcoin consolidated for months. Many interpreted every correction as the end of the rally. But beneath the surface, strong hands were accumulating. In 2017, we also saw dormant movements before the market entered its final parabolic phase. Does history repeat exactly? No, but it rhymes. Derivative data currently shows elevated open interest. That means traders are heavily positioned on both sides. This increases the probability of what I call an omega move, a violent candle that wipes out over-leveraged positions on one side of the market. The only question is, which side? If Bitcoin drops below $68,000 and triggers liquidations, we could see a final capitulation flush, a sharp, aggressive move downward. Those kinds of moves cleanse the market, and that's often where whales accumulate. On the other hand, if $70,000 is reclaimed and confirmed as support, short sellers could get squeezed. A short squeeze would ignite momentum. Suddenly, sidelined investors jump back in. FOMO returns. The market is playing a game you don't see if you're only staring at red and green candles. While you feel emotion, whales analyze liquidity clusters. While you read panic, they see opportunity. That's why this 2043 Bitcoin movement is so fascinating. It's not just a transaction. It's a signal, a wake-up call. It reminds us that early actors are still here, that long-term conviction still exists, that capital accumulated at $4,000 is now being strategically maneuvered. Right now, watch two key things. First, how does the market react to additional dormant movements? Second, what happens to exchange reserves? If Bitcoin is being withdrawn from exchanges, that signals accumulation. If large amounts flow into exchanges, selling pressure could increase. And above all, don't let short-term noise control you. Understand the structure. Understand the cycles. Understand that scarcity and demand dominate long-term trends. While you're panicking, someone else is planning their next move. Is this the beginning of a deeper correction? Or are we witnessing the setup for the next impulsive move? Let me know in the comments how you interpret this whale activity, dump incoming, or strategic repositioning. I read every opinion. If this deep analysis helps you understand the mechanics behind the headlines, support the channel. Because in this market, knowledge isn't a luxury. It's your edge. And never forget, the market rewards patience, discipline, and understanding, not emotion, not headlines. Stay alert, stay rational, and above all, stay one step ahead.